You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, coming to you from the Options Insider Studios here in the options capital of the world, Chicago, Illinois. And of course, where can you find all of the great back episodes and archives and interviews that we've done for many years here now on this program, as well as, of course, all the other programs on the old network. Well, of course, surf on over to the mothership, theoptionsinsider.com. You can pretty much find everything that we do up there, all the written content, all the news, all the analysis, unusual activity, and of course, all of the episodes for all of our programs, all 13 of them on the old Options Insider Radio Network. Click on the Insider Radio Network tab, top left corner of the page, and you're pretty much off to the races. Of course, you can also find it wherever you find your favorite podcast programs, iTunes, TuneIn, Stitcher. I was testing out some other podcatchers this weekend, including Pocket Cast and others, and they're all in there as well. Just type options, and you're pretty much off to the races there. All of our stuff comes up. It tends to overwhelm the search sometimes, but we'll be in there. So no matter what you use, you can pretty much find our shows there. Of course, if that's too much work, go and grab our mobile app, available for pretty much all the platforms, including the Amazon platform. Some new tablets coming out this week, or coming out soon from Amazon. So maybe we'll see more of you out there using the Amazon version of the app. We make it for you. Go ahead, run and use it. And of course, while you're listening, while you're streaming, while you're downloading, listen to the show. Shoot us an email, shoot us a question, shoot us a comment. We love to hear from you guys. That's all baked into the mobile app to make it even easier for you guys to do just that. And joining me on this interesting version of Volatility Views after a very interesting ball week is the greasy meatball himself, Mr. Mark Sebastian. You know him, you love him from his myriad appearances on the old network, including from his moonlighting gig over there at optionpit.com. Mr. Greasy Meatball, welcome back to the Volatility Views program, sir.
Good to be here. Interesting day right now. Really interesting day. Interesting week.
Yeah, interesting week, I think, is the best term for it.
All sorts of interesting things happening on the week. So just a crazy couple of days.
Then let's get right into that craziness and dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, this is the portion of the program where we break down the week that was from a volatility perspective. And as Mark alluded to just a few minutes ago, it was a bit of a crazy week from a vol perspective. You remember last week, listeners, we were kind of prognosticating in a crystal ball segment. What's going to happen post-Fed? What are we going to see going into the Fed? A lot of question marks on the table coming into this week, and coming at the end of this week, there are still a few question marks on the old table, but we did see some very interesting stuff. Of course, VIX remained elevated, remained inflated, remained hefty going in to the Fed announcement. Understandably, no one really wanted to hit a lot of bids from a vol perspective because no one knew what the hell Yellen and the crew were going to be up to. Of course, we did, at the end of the day, they ended up doing a lot of nothing, which I think a lot of people expected to cause volatility to just come crashing in and the markets to go racing skyward. And we saw that ever so briefly, I believe, in the VIX Cash land. It dropped from about 22 handle or so right down to about 18. And then once it hit that apparently magical 18 even level, that was it. It just turned around and never looked back. As we are recording this right now, listeners, it is Friday, September 18th, right around midday here, mid-session, and we're hovering about 22.5 or so in the VIX Cash land. So some vol still creeping back into the market. Market selling off a little bit today. Not as aggressive as we've seen in recent weeks, but still enough to keep the needle moving. And, of course, the question marks still remain, as here we are post-Fed. Still a lot of vol in the marketplace, still a lot of uncertainty, still a lot of question marks about where we're going from here. So a very interesting week. Mark, I kind of just laid it all out there, but there's a lot to parse within this week, including what we're seeing today. So walk us through kind of the week that was for you going into the Fed announcement, coming out of it, your takeaways from what we saw going out there, vol catching bids, vol getting hit all across the board, as well as kind of what we're seeing unfolding here today.
I think the interesting piece is really, if you look at how things progressed, Tuesday, Wednesday, and most of the day on Thursday, they really took some premium out of the market. We were both kind of expecting volatility to kind of get bid. And instead, vol kind of was offered all the way through until about 20 minutes after Yellen started talking. And then in one fell swoop, he gave it all away, ended up down on Thursday. I think the big move, though, was the VIX futures, which exploded higher. At one point, October rallied $1 yesterday with after the bell, with SPOOs only down about an extra $5. It was just an absolute, somebody got caught short and was racing to cover. And now here we are today, market's down over 1% and VIX is barely moving. I mean, it's up about $1 right now. And VVIX is the volatility of VIX is actually in. So it's just some weird funniness. I think the one thing that we now know is that, maybe this is the market figuring out that the Fed is not just going to be there to print money permanently. Even though the market may know that the Fed is not going to raise rates in 2015, the fact that there probably is no QE coming again is something that maybe the market's working to digest, similar to the stake that I'll digest at the end of the year that Jared's going to buy me.
Not looking good for Mr. Woodard on that front, but he does maintain
that right now.
To his credit, he does maintain Deese is where the action is going to be now. I think for a while there, he was even talking June. So
he's been RMC. He's like, they'll raise in June. No, maybe June 2016 they'll raise.
I guess that's the reason why he's been discreetly avoiding the program of late. He doesn't want to discuss his impending loss on the stake front. But
the VVIX thing was a little surprising to me. The fact that they took it up yesterday and they're taking it right back down today, and the cash VIX itself is not doing a ton, and the VIX futures are up pretty nicely, but we're not seeing a lot out of the cash index, even though the market is down pretty significantly. So this has me wondering whether we're kind of lining up here today, maybe Monday, for then some sort of extended rally. I'll be interested to see whether we make a run at 2100 or 2030 or 2050 next week. I would not be shocked.
It's funny you mentioned people taking some vol off going into the Fed. I was talking to some guys just yesterday, actually, who were out in the VIX crowd, and they were talking about how things seemed to be pretty firm going into the announcement, particularly on like some of the extremities, the wings there. They were talking about, I think I have it here, some strangle. Oh yeah, D1730 strangle that went up some earlier this week, and I think it went up for about 230 paper buying it, and then as the week went on, that continued to remain a firm bid, if not even higher. Going into that. So they were talking about how the wings, they were surprised how firm everything stayed going into the announcement. So I guess it depends kind of on your frame of reference where you're looking on the announcement. But yeah, a crazy week in and of itself. And of course, a lot to parse there. As I said, as we're recording this right now, VIX Cash hovering around the old 22.5 level. So kind of anyone's guesstimate as to what's going to unfold here in the coming weeks. Of course, the Fed on the back burner, at least for the foreseeable future. Not talking next meeting, of course, in the D's time frame, and not expecting any emergency raises anytime soon. Mark, we were kind of joking about this on the option block yesterday, and I was saying selfishly, all of this noise from the Fed over the past few months, Miss Yellen out there raising her hand saying, don't forget about us. We still may want to do something, so pay attention to us. Clearly, it exacerbated a lot of the volatility we've seen over the past few weeks. A lot of these moves were extended or much larger in scope and size as a result of perhaps some impending Fed action and the fear of it, or perhaps the joy of the lack of it, however you want to view it. And so selfishly, from me, from a content perspective, from a trading perspective, that's been a good thing. But I have to kind of look back on these last couple of months and all the excess, I think you can call it technically nonsense, that was injected into the market as the Fed is kind of being a big macro negative effect. I'm curious, what's been your view on kind of the endless back and forth, pay attention to us type of stuff coming out of the Fed of late, all to result in a whopping goose egg yesterday?
Yeah, unbelievable. These people need to shut up is what it really comes down to.
I'm kind of in that same camp. Maybe it's a diehard libertarian in me, but when you have nothing to say, don't say anything.
Yeah, you're supposed to be responsible for to smooth out the economy and smooth out markets, and you're supposed to be a voice of stability. And they're doing everything they can to make it all about themselves and to jerk markets around. This is just irresponsibility and a bunch of people trying to make it about themselves where it really should be about what's actually, what's best. Like, shut up, do your job, and stop giving interviews. Seriously. Stop giving interviews, stop talking, and because they all look like idiots now. That's the other piece. They look like a bunch of morons because they're saying all this stuff and then they go, oh, well, we're just kidding. We're not doing anything.
Yeah, I could certainly see, and not to turn this into a rant against the Fed or any sort of the other things that go with it, but I could certainly see how someone who's a casual investor from the outside, they see all this noise over the past few months, all the impact it's had on the markets, all the headaches it's given them perhaps, and sleepless nights, et cetera, and then all of that to amount in exactly nothing, which is what everyone said many months ago. If you go back to this show or others months ago, many global bodies, I don't care, IMF, I don't care where they're coming from, global other interest rate bodies saying if they raise rates, they're crazy. There's a lot of data, except for Jared, a lot of data out there saying there's no reason in hell to consider raising rates right now, and yet they kind of had to inject themselves into the conversation. Not perhaps the Fed's most shining moment in the long and storied history of that institution. There's other prizing developments, kind of bringing it back to the vol land. We can slam the Fed for quite a while, but some other surprising developments. VIX has been moving a bit, but it's not as perhaps rocking and rolling as you might expect. But you look a little bit closer to home. You look at the progenitor of the old VIX, of course, the SPX, and they have indeed been rocking and rolling of late. I was pulling up some data just to check it out going into the show today, Mark, and look at the total open interest out there in SPX options right now. Forget SPY, forget everything else. Just the big mothership there, SPX, and the total open interest out there from an options perspective is in the 99th percentile. So it's just rocking it out of the park. Both calls and puts, there's really they're both pretty equally bid, equally loved right now from an overall volume perspective. So that product rocking and indeed rolling. Of course, VIX a little bit lighter. We'll get to the overall VIX options in a minute. But still, there's, of course, we had August, some of the more data coming out of August. Recently, we saw some very, very active days. I think a lot of people surprised that the big day coming out of August wasn't the 24th, like a lot of people thought it would be, but actually the 21st, that Friday before it, which people forget also had a pretty aggressive move, not as crazy or as out of left field as the massive sell-off that Monday, which kind of dwarfed everything. But that Monday, I think, turned out to be kind of so shocking and so out of left field that it maybe had an impact on volume. It wasn't perhaps as robust of a volume day as everyone expected. So a lot of interesting data. I guess probably doesn't surprise you, Mr. Sebastian. SPX rocking and rolling at some pretty much near historic levels right now. Just looking at how much option love is going on out there. Puts over calls about 1.8 to 1, which is actually somewhat low for this product. I think just showing there's bids on both wings right now. It's actually in the 34th percentile for the put call ratio, so surprisingly low, not as put heavy as you might expect. Showing there's irrational exuberance on both sides of the wings. So what's your take on all this SPX love out there right now?
I mean, tons of volume. I mean, all of this stuff really pumped volume in the two big institutional products that SIBO has, so SPX and VIX, and we just saw some massive trading across the board, hedging, rehedging, changing their hedge. A lot of people got repositioned very quickly, and thus volume pretty much exploded. Just huge, just some really big trades that went up where people are buying strangles, people are buying, you're right, people are buying both ends of it. They don't they're full, especially at that point, that was when we were still used to the idea of the V bottom. So a bunch of people hedging, but maybe playing a V bottom as well. And obviously we have not gotten the V bottom that they were looking for.
Yeah, that V not materializing for anyone in any way, shape, or form. Let's flip the script over to the VIX products right now and seeing how they have been doing decent volume out there, but perhaps not lighting it up as much as people thinking. I mentioned how most metrics, overall put volume, overall call volume, overall open interest, SPX is pushing the 90+ percentile. Just about everything, hitting near record levels on pretty much everywhere you're looking. SPX options not doing well, but not perhaps lighting it up as much as you might expect, given the volatile environment we are in of late. Overall volume hovering right around that 50th percentile level. Open interest, of course, open interest having some adjustments of late, but about 50 percentile as well. But even net volume, calls over puts, puts and calls, about 50 to 60 percentile. More love on the put side than you're seeing of late, which is kind of interesting. I think any tick in the put volume in VIX whatsoever kind of pushes it up there into the higher percentiles because it just gets loved so infrequently. What did your Typhon buddy say on the show recently, Mark, when they were talking about someone doing a bullish risk reversal in I believe it was VXX? They said it was a unicorn out there. Kind of seeing a lot of put volume in VIX is the same thing as it's another unicorn.
Yeah, it's pretty nuts. There have been a lot of people betting that VIX was going to drop back down, and they've been wrong. And a lot of people basically gambling VXX was going to pop back, and thus far, or pop lower. And thus far, neither has really occurred. There's we were briefly in contango earlier in the week, but we're still in a pretty backward VIX term structure, and we have a relatively flat cash structure where VIX and VXMT and VXV are all relatively flat on top of each other. So all sorts of interesting things going up there. VIX itself, the volatility has remained super stiff, and we've continued to see people doing some hedging. The 1x2 guy obviously hasn't come back. I think he's gonna wait until
he might be sitting it out for a little while. When you knock it out of the park, you take a victory lap or two before you come back, maybe.
Mm-hmm. So he hasn't been around. We haven't seen him in a while, but the volume's still been pretty robust there, pretty heavy, and continues to be. VIX futures, I mean, I'll tell you, weekly VIX options cannot come soon enough. Don't you agree? We've got 3 weeks, so we've got. Yeah, I mean, they list on October 8th, and I can't wait. Those are going to explode volume.
That's actually what I was just pulling up as we were talking, is trying to get some numbers here for the weekly VIX futures. Obviously, those still having some challenges getting added to systems and things, so they're not really lighting it up as they expect. But yeah, I'm with you. Imagine the numbers a VIX weekly option would have put up a week like this or last week.
It's going to do some awesome things. It should be fun.
Watch, they'll launch, and the weekday launch is when all of this settles out, and we go back to the kind of market we had in July or June.
VIX,
yes, yeah. And they'll do nothing through the end of the year, and the exact period that a product like that was designed for, they would have missed it by a few weeks, and that would be indeed a shame for everyone out there who wants to trade that thing.
It's unfortunate that it's taking this long to get those things listed, but once those things list, that's going to be fun.
Yeah, I'm looking forward to that. I think, as we've said before many times, that'll also accrete back some volume into the weekly VIX futures, which are still comparatively anemic, despite the fact that you'd think if you were trading those, you might want to be playing out there right now. But yeah, like we talked about with the Typhon guys recently, so many of the established players out there in the VIX futures are out there playing the term structure, playing a much longer term play, and they're not really in that super near crazy backward portion of the curve that the VIX weekly futures live in. So it's kind of a different animal. It's speaking to a different audience, and I think that weekly VIX option guy would be the end user for that. So once those launch and they want to hedge with them or trade with them back and forth, that'll really, I think, accrete to a lot of interesting volume. Certainly more than we ever saw with that VXST. I believe we have a listener question about that a little later, so maybe we'll save our rants on VXST and related products for then. Speaking of related products, did anything we talked last week, Mark, about the just insane, mad, I don't know how else you can describe them, obtuse, arcane distributions we saw coming out of the VX up, VX down in order to bring it somehow in line with what the hell was going on out there in the marketplace. Just anything else catch your eye out there with that product this week? I mean, aside from just the madness that it is, to try to keep it somehow relevant to the conversation, the almost yoga-esque gymnastics they have to go through with that product. It's very impressive. Anything catch your eye out there from a volume or distribution perspective this week?
I mean, I don't even know. I mean, I think the product's done. VX up is 55 cents. And they're trading 50,000 a day, but I'm going to say that this product is about as dead as about as dead can be, let's just say.
But looking at some of the other things, we mentioned on the show last week as well, kind of an interesting development. It's back to where it usually should be now, but last week, RVX dipping ever so briefly below the VIX Cash, and if you know anything about those two products, structurally, that's kind of not how they're supposed to work. Small cap should be more volatile just on a structural basis than large cap, and we're seeing this week RVX ever so slightly above the old VIX Cash, but they're still within spitting distance of each other, which is kind of interesting in and of itself, Mark, and it kind of reflects a continuation of what we were talking about last week, where it seems like going forward, a little bit of a structural change at work, where the small caps not perhaps being as volatile, and perhaps the large caps with their exposure to the insanity in China and other international markets may actually be rocking and rolling a bit more than the mostly domestic stuff we're seeing in a product like RVX. And it seems like, Mark, this week at least, that relationship is still pretty close to coming to fruition.
They're right on top of each other. I mean, you've got RVX is 80 cents higher than VIX. But if you look at the SPX is moving more than the Russell. The Russell has actually been the well-behaved stepchild it's been the Cinderella to the two ugly stepsisters of NDX and SPX. So that's been kind of unique. You're not used to seeing the Dow and the S&P being the high volatility space and the Russell being the lesser volatility. But because Russell is so domestic in terms of where they make money, I think that's what's really allowed it to behave this way.
Yeah, kind of an interesting beast. That's a fun one to watch going forward. I know for a lot of the vol researchers out there are kind of wringing their hands over this one and saying, what is behind this kind of strange movement we're seeing in these two? But a lot of interesting, I think, perhaps systemic things being reflected there, and something worthy of note, worthy of watching as we go forward. We touched on the Fed earlier. The Fed obviously driving a lot of vol in the primary equity markets, but of course also causing some other interesting issues out there as well. I've been looking. I'm not sure how much you watch the old the TY VIX stuff, which is of course SIBO's latest attempt to extend the VIX family, this time to the Treasury realm. I've been kind of paying some sideways attention to these over the past few months, Mark, trying to see what they're reflecting out there, and looking at it going into this week, some of the term structure out there in these various products out there, and comparing it to what we're seeing in the big VIX futures. It did certainly seem like what was being priced in from the Treasury VIX perspective certainly wasn't perhaps expecting the level of craziness, level of weirdness, and we've talked many times about how funky the VIX futures term structure has become out there, particularly in the longer portion of the curve. Not really seeing that reflected as much in that old TY VIX. Granted, that's still kind of a new nascent issue out there, a new nascent index that they're disseminating. But still, you'd think, all this Sturm and Drang about the Fed would translate into a lot of vol that would be reflected in all those TY VIX issues. And so far, at least, and I don't have the updated numbers for the end of this week, so that could be reflected right now. But still, it hasn't really been playing out there, perhaps, as you might expect. Have you been watching TY VIX at all? Anything really catching your eye out there?
I mean, well, they did take vol down pretty significantly after the announcement, from about 6 down to about 5. But it's not one that I've been paying attention to. It's a little abstract, and I don't get, and it stays in such a tight range. People don't realize that it's because of Fed monetary policy. It's been so how do we say, just kind of stagnant. But if eventually the Fed actually gets out of the way, it'll be interesting. LIBOR. Now, the one area that was trading was the Eurodollar options. Those things were nuts. Thursday morning, there was tons of trading in Eurodollar options, and I don't know that there is a vol index for Eurodollar options, but those things were flying about in the face of the Fed, and so that was kind of fascinating.
Did you ever spend any time out there in the Eurodollar over there at CME and any of your various exchanges that you traded on?
I never traded them, but it's something that you have to pay attention to and you have to look at. Because that's really where you set your interest rates for everything you do, and it's a super active contract. If I was going to go back and be a market maker, that would be one of the places I would consider doing it, because there's a ton of trading activity there. I might also look at, I probably would, if I was going to market make, over on the CME side, not on the SIBO side, just because there's still open outcry and still volume there where one can do pretty well. But again, those products are very abstract to, people that are just used to equity. They're so different.
Yeah, a different beast entirely. Whenever I would come over there from the SIBO, we had some CME operations as well, mostly fixated around the S&P futures and options. But still, I would always to take a little gander over there, the Eurodollar options pit over there, and it was always just an amazing beast to watch unfold when it was really rocking and rolling out there. And it's one of these products, you're right, that has persisted with still some open outcry volume. And you heard for years people saying it's so difficult to model electronically, it'd be hard to execute electronically. Well, they've overcome most of those hurdles now, but still, it is an interesting product to watch, and certainly you're right. Maybe one of the few havens left for someone who wants to go out there and try his hand as a liquidity provider. Not that I would recommend that, listeners. That's a rough road to hoe these days, but still, if you were going to hang your hat doing that these days, CME, you're right. For as long as the options pits remain, maybe clock's ticking on those a couple of years probably, but still, for as long as they remain, that may not be the worst place to hang your hat. Looking a little bit farther afield at some other products we've been watching of late. You and I always check in on crude, and been some interesting activity out there in crude land as well. Our old friends OVX and OIV hovering right in the mid 40 handles right now, having come off their very recent highs. I think they were pushing 60 at one point. Now, like I said, hovering, right in the middle of that 45. It is impressive when you watch them, Mark, and when you see something obviously goes into the calculation as well, but the big crude oil products and USO, two very, very different products. And yet OVX and OIV tend to move in lockstep, maybe more than you would expect. They're very, 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 very symbiotic products. Did that ever surprise you when you first started watching these?
No, I mean, it makes sense that the two would have similar volatilities. There's ways to trade the oil future and create USO and vice versa. So, obviously, oil is the dog and USO is the tail, but that product, if you take out kind of some of the rolling issues, USO correlates to oil very, very well, and its volatility correlates at somewhere around 99%. So it does make sense, and we've really seen oil premiums come off pretty ridiculously, especially now that it looks like the Fed's not raising rates, and that's part of the reason. The volatility has come back down from the 60s again. It looks like oil's finally starting to calm down. That's kind of my interpretation. I think this may be this time next week we may be talking about it back into the 30s.
Yeah, the correlation from a vol perspective between USO and oil is always kind of that to me is really where the story is. Underlying, not so much, but their vol is as near close as you're going to get, which is an impressive degree of correlation. And right, it does show how much back and forth there is between the two different products to keep them as inextricably linked as they are. You see some other indices on the equity side that should be closer than they are, and they're nowhere near as linked as these two. So, yeah, it does show how much flow there is back and forth. Speaking of back and forth, maybe not so much forth these days, just back. Our old friends over there at Goldman, we kind of mocked them before about their shall we say, screed about how vol was dramatically underpriced, and that it was going to accrete to the upside. Of course, as we've just shown you, that hasn't really proven to be the case. They were also talking oil down pretty aggressively, saying it was going to be south of the 40 handle. I believe it might have been even by October expiration. I'll have to check, but it was sometime in the relatively near future. They were saying oil was going to flirt south of the 40 handle. Did ever so briefly get there, not 40, but about 45 or so, get close on that. But yeah, they were clearly on the wrong side from a vol perspective. Well, you gotta give them points for resilience, Mr. Sebastian, because they're back at it again, coming out with another report out of Goldman on last Friday, so a week ago now, and they were kind of doubling down. They said if 40 didn't float your boat, how about 20? Because they're now calling for oil, what they're calling a quote-unquote doomsday scenario, worst-case scenario. It could plunge as low as $20 a barrel amid the glut of production they're seeing around the world. Let's see. They're kind of hedging their bets here. They're saying their official projection for WTI for 2016 is $45, which is actually up from what they were saying earlier. But they're saying, if the worst case scenario happens of this production glut, et cetera, then we could be flirting with a drop to they're not even saying the 20 handle. They're saying 20 even, which is it's an impressively two-sided prediction, and it's also an impressively draconian. But I guess if your goal is to get headlines and perhaps keep beating the drum for a position that isn't working your way, this is certainly an impressive attempt to do that. Mr. Sebastian, what's your take on our friends here? Still beating that drum for the South side here in oil.
I mean, is Goldman's research team, how is Goldman's traders so awesome and the research so terrible? Do the traders literally tell Goldman research, hey, we want you to do this, and then they come out with whatever? So my theory is their traders are trying to accumulate as much oil as they can down here. At around the 30, in the low 40s, so that they can, they're trying to generate sellers. I don't know, but their research team has to be, maybe it's like a Wizard of Oz thing or something like that, where, the traders are behind the curtain and there's this analysis group that's, the Wizard of Oz. It's unfathomable how they keep coming out with these ridiculous predictions, and it makes you, things that make you go is when that research team comes out with that stuff, their VIX stuff, their oil stuff. It's been shockingly bad.
It does kind of make you wonder, like the weatherman, how they can be so wrong so often and yet still have a job. And of course, you're right. The tinfoil hatters out there, the conspiracy nuts, are going to say, well, research is just kind of the other arm, another marketing arm for what the trading side has on, and that certainly is out there. We're not making that allegation.
So I'm wondering if they're trying to get long. I mean, that would be my, analysis of how, what they would be going through. I don't know. I doubt they're massively short. Even though they're saying that oil's going lower, I'll bet you that their traders do not have a massive short position on.
I'll have to go check and do some research, but to see if you came in and started lifting bid offers, or even if you worked some bids when they were telling you to buy implied vol in crude a few months back, how well that's turned out numbers-wise, but just from a net-to-net perspective, not too well. So, yeah, we'll see. They're continuing to beat that drum, so give them points for stick-to-itiveness, if not else. But you're right, it does kind of make you scratch your head when you continue to see these projections that fly in the face of a lot of other things that perhaps, others may say there are other agendas at work. We shall see. That's always the knock on people say on all the different research teams across the street is that they have some other agenda at hand. It doesn't usually turn out to be the case, but that's a frequent complaint out there. And interesting enough, just from a vol perspective, yet again, diving into the maelstrom on crude, the folks at Goldman. So we'll see how that works out. If recent history is any indication, then maybe it still isn't a good time to be scooping up some vol. But we'll pay attention to that. Meanwhile, it's time for us to turn our attention to you guys here on the program and open up the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Volatility voicemail. Like the man said, this is the portion of the program where you guys get to join us on the old panel with your questions, your comments, your insights, all sorts of fun stuff. Got a lot of good questions here. We'll see how many we can get to. This one comes in first off from Charlie. Charlie N. He writes, "Hey, this is a quadruple witching month. Does this have a big impact on option volatility?" You're seeing a lot of articles coming out about all this today, including an interesting one. I'm not sure if you saw it, Mark, from CNBC, where they kept referring to it as quad witch. All the traders on the street call this quad witch, and I had to scratch my head because I've never heard that term before in my life. But first off, have you ever called it quad witch in your life, Mark?
No.
I would think not. And if you did, I would have thought less of you. But yes, that aside, this is one of those market events, comes around 4 times a year, in which causes a lot of commotion in the old media, but doesn't really accrete to a lot. Actually, I think in that CNBC article, their ridiculous nomenclature aside, they actually have some decent data showing how this date has performed and the impact it's had on the markets. And this is kind of a refrain we've had on the show before, Mark, of late. It seems like a lot of these things that used to be big deals, monthly expiration was a big deal for a long time, kind of has lost its significance now in the wake of weekly expiration. All these other things, quadruple witching, triple witching, et cetera, a lot of them really have kind of, I wouldn't say fallen by the wayside completely, but they're nowhere near, the volume drivers, the activity drivers, even once in the old days, the vol drivers that they used to be. Is this even fall on your radar anymore, the quad witch, or is this kind of an indicator that it's perhaps a bit long in the tooth these days?
Yeah, I think when we brought in all these weekly options, it dramatically changed the way that triple witching and quadruple witching can affect things. Now, obviously, anytime that you've got to do futures rolls, that's really the big driver. So of what makes it a little funky is all the guys doing futures rolls. But with all these weekly options now, there's so many different. The option side of it doesn't affect things the way it used to, and I think that's really why it doesn't matter the way it used to. Is that we now have all these weekly options.
Yeah, I mean, when you're talking rolls, that's not really a driver of systemic volatility. People just lining up their hedges to keep them on for the next month and things. It's not really a big vol issue. It's kind of more of a just like the name implies, just rolling, just keeping it on for the next quarter or the next month, however you're setting it up. So it's not really. I really don't lump that in the volatility driver camp. It does drive some volume, so you'll certainly see that, but it's a lot of volume that doesn't really accrete to much at the end of the day. Good question, though. You obviously have been reading a lot of the media. It's been going up this week, hitting all about quadruple witching. But yeah, all those triple witching, quadruple witching, even monthly expiration, not really the massive events they once were, when pretty much every Friday is expiration Friday now. And who knows if we start breaking that that weekly cycle and start seeing some dailies and other things. Every day could be expiration Friday pretty soon. So, these monthly or quarterly events don't really hold the resonance that they once had. Good question, though. We have another one here coming from Inco6. He or she writes, got a couple of product questions here, Mark, so we'll just go through these. This Inco6 wants to know, hey, what's up with, this is what I was referring to, what's up with VXST? Is it done? Haven't heard you guys talk about it in a while. Well, we just did earlier in the show, but the reason we're not really so keen on VXST anymore is because it pretty much is effectively done. I'll have to check. There might still be a few months still out there in listed, but really effectively, when we started talking about the VIX futures, the weekly VIX futures, that kind of obviated the need for a VXST. And now that we have VIX options, weekly options on the horizon coming in next month sometime, early next month, that's going to pretty much erase any last use case you might have had for a VXST product. So they have even admitted this over there at the CBOE that they're pretty much not adding any future listings to this, which is effectively delisting it once whatever current cycles remain are done. It's going to be the end of the brief, tragic story that was VXST. If you want to see an interesting kind of breakdown of that, search for VXST on our site, The Options Insider. We did a kind of an interesting breakdown of the short history of this product and how it kind of launched with a lot of furor around it. Did some volume on some surprising days when you wouldn't expect it, and on days when you would have expected it to do a lot of volume, when the big mothership, the flagship, the big VIX options were lighting it up, not so much. It was really a bit of a head scratcher as to who was using this, what the use case was for, what was driving it, because it was clearly a different audience, because they weren't really moving at all in lockstep with the big VIX. If anything, it was almost the inverse. So check out that article if you want to see kind of the storied history of this product and how it kind of wound down. But you can kind of lump it in somewhat with the mini options, and that a product that kind of launched with a lot of fanfare, a lot of interest. A lot of people thought it was going to be a slam dunk, and then it turned out, for a lot of reasons, maybe some reasons to do with the product, some reasons to do with the audience, and a lot of other issues, it really just kind of withered on the vine. And also, I think because a VIX Weekly is probably an easier thing people wrap their heads around, it probably made more sense than this bit of an arcane minutia they were doing with VXST. Of course, we'll have to wait and see next month when the big VIX weekly options list, if they do kind of knock it out of the park the way VXST didn't. But still, yeah, I think you can pretty much put the tombstone up for VXST. Mr. Sebastian, anything you want to add for Mr. or Mrs. Inco 6 on the short but somewhat storied history of VXST?
Yeah, that product is done, and so I was a little surprised. I thought it was going to have some traction. It did not. I think part of the reason mini options didn't work out is because brokers still charged full option price, even though it was 1/10 size. And
yeah, retail isn't stupid at the end of the day.
Yeah, and brokers kill a product that actually could have been a good product because they were greedy with the commissions.
I kind of wonder if we're going to see another tilt of that windmill eventually, because it's a product that makes sense. Maybe not so much with Apple having split now, but Apple was the primary use case for it, the test case. But I wouldn't be surprised if down the road we maybe see another tilt at the mini windmill, perhaps with more industry ducks in a row. You're right, brokers agreeing to rational pricing, market makers hopefully willing to make markets in the thing, so the markets, so you're not paying essentially a double commission, which is you're paying full freight for the product itself, then you're paying these spreads that are wider than the actual mothership options product, so you're kind of paying a double fee. You got to really want to trade a product at that point to do it. So that kind of killed it. But I wouldn't be surprised if we see maybe another attempt, maybe hopefully with some lessons learned baked into it, kind of like we're seeing now with the VIX Weeklies, and learning some lessons from VXST and hopefully applying that to a new product. Another product question here on the old inbox this week. This comes from Geronimo. So he or she writes, hey, this question is for Volatility Views on the Options Insider Radio Network. Well, you sent it to the right place there, Mr. Geronimo. I would like to know about the VolDex volatility contract from Nation Shares. Your program featured an interesting interview with the creators of this product, but since then there has been very little news regarding the launch of VolDex. Is it currently available for trading? If not, do you have an anticipated launch date for these products? Thank you for producing this program. Glad I discovered it for my weekly volatility fix. Well, we're glad you did too, Geronimo. You're late to the party, but better late than never. A lot of great archives for you to go check out. Years worth of analysis, data, debates, and of course, great guests that you can check out in our archives that I mentioned there at the top of the page. Regarding VolDex, I was chatting with these guys not that long ago, a few months ago, with the folks over there at the ISC, which, if you remember, are the partners for VolDex. And very briefly, if you weren't not familiar with VolDex, A, check out the episode we did with them about a year ago. But B, it's essentially, VIX product without the skew. Some people have lamented that the new VIX calculation takes into account the skew, and of course we've seen complaints of people using the carpet bombing and the puts to affect VIX settlement, things like that. Some people saying that shouldn't be part of it. So if you're in that camp, the VolDex product, which essentially is just trying to essentially replicate kind of old school VIX, just the implied vol of the SPX. Of course, it was OEX back then, but still, that's kind of what VolDex is trying to do in a nutshell. One of the reasons they haven't launched is kind of the things that's holding up a lot of other vol products in the space right now, including the VolX guys as well, is the lack of an underlying. And that's kind of what they really have. Everyone has seen you need really a reliable underlying to kind of launch a volatility option around, and they don't have that yet. So I think they're working on how to get a future listed for that product and what goes into the minutia of listing that before they actually announced and launch the VolDex thing. But as far as I'm aware from them and talking to the folks at ISE who will list the options, that the VolDex options products are ready to go. It's really just kind of a wait and see on how they're going to, what kind of underlying is going to be, maybe an ETF, maybe a future, and how they're going to implement that going forward. Mark, have you been paying attention to the VolDex saga, and you have any insight into what's up with that product?
I have not, and I do not. I think it's a mistake to try and take skew out. I think that's an important part of the hedging cost. You look, most people don't hedge at the money; they hedge out of the money. And so, if you're taking skew out of the equation, you're really taking a big piece of volatility out of the equation. So, my personal feeling is that this. Between that and VolX, I think the VolX product has a far better odds of being a successful product than this VolDex. I just don't see it.
But I actually agree on that front. That's one of the changes I liked about the quote-unquote new VIX. No new, because it's new, it's been a decade or so now. But when they updated the formula, not only did they move it to the SPX, which was a more relevant product than the O, but I was just talking about the O about someone last night about the long and storied history of the OEX and the 1.5, and we can maybe get to that on another program. But I agree. I thought adding the skew, incorporating that into it was an important part of trying to take what the VIX is trying to do, which is really kind of a snapshot of what's going on in that front portion of the curve there, in the front portion of the SPX options. And if you're leaving out a substantial portion of what's going on, I mean, you're right. How many people are lighting up at the money SPX? I mean, it's an active contract, but there's a lot going on, particularly in that put wing. Look at the numbers we just showed you earlier in the show. That's where a lot of the action is. And if you don't take that into consideration, you're, not pun intended, your number is going to be a little bit skewed. So I do kind of question the need for the nation shares VolDex product. I think we mentioned that to those guys, and they were on the show as well. But it is an interesting one, and clearly there may be a demand for this. Some people prefer the old school product, in which case maybe this will succeed. So yeah, we're kind of playing a wait and see on a lot of these other ones here, Mr. or Mrs. Geronimo. They kind of all need a future or an ETF or some sort of underlying, and so they're kind of all working on those details. Once those are sorted out, VolX, same thing. They're already approved by the SEC. It's just a question of an underlying. They're ready to go on Box. VolDex is ready to go on ISE. So the options are ready to go. It's just a question of the underlying, and whoever I guess can solve that problem first will be the first out of the gate. So we'll be paying attention to those. Great questions this week, everybody. People really interested in the product side of the space this week, which is kind of interesting. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. The last few weeks, this has been a challenging portion of the show because there has been so much afoot. A couple weeks ago, we kind of went out on a limb and said, vol probably going to remain elevated. That turned out to indeed be the case. Then last week, kind of a lot of question marks as to what was going to happen post Yellen, post Fed? Would we see if they raise? Would there be an aggressive sell off? What would that do to vol? And initially probably a little bit elevated, but then probably would it come off by this time next week? By Friday, would it have come off? Or if they don't raise, are we going to rally? Is vol going to come off? What is afoot out there? And now here we are, a day or so after the Yellen lack of a raise, call it what you will, and still a lot of question marks afoot. Market still kind of selling off a bit today, sold off a bit yesterday after the initial rally. So we're seeing still a lot of people, the bulls and bears, fighting it out. Vol remaining relatively elevated, certainly higher than where a lot of people expected it to be by this time this week. I think a lot of people thought when we had that initial sharp drop in the VIX getting down to that 18 handle that we were that's where we were retracing. We were heading back to that mid-teen range, and we're going to hover around there, at least going into earnings season. Now, it's kind of anyone's ball game right now as to what's really driving this and what is afoot for the week to come. So, Mark, probably one of our more challenging crystal balls in a while. We're hovering right around the 22 half range or so in the VIX Cash right now. What's your gut telling you, aside from that salad is tasty and delicious? Are we going to be this level or higher perhaps next week, or maybe flirting these levels, or perhaps back maybe where some people think we should be in like the mid-teen range?
What's weird is I'm watching the market hit lows of the day, and the VIX is a full point off its high. And when we see the market kind of tanking and the VIX kind of not moving along with it, that's sometimes the sign that we're getting ready to rally. That's actually one of the ones I really look at is, okay, we're at the lows of the day and the VIX is nowhere near its highs. Something is afoot. And so, my guess is that there's a decent shot that we're going to be closer to 2,000 than where we are right now, which is 1960. And I could see the VIX hovering, 20, maybe. I would not be surprised if we got in a relatively flat term structure, maybe a little contango next week. That's my bet, and I think you're going to see oil vol come in significantly over the next couple of days.
Just thumbing your nose continually at the Goldman folks over there. But you're right. As the show has progressed so far, the sell-off has intensified off about 30-odd handles in the S&P right now. And you're right, VIX Cash hasn't really budged a heck of a lot, still hovering right around that same level near where we started. So perhaps something afoot there as well. But yeah, you're right. This is an interesting time. A lot of question marks out there. So perhaps if you're one of those folks out there with those question marks, maybe you keep your powder dry this weekend. Don't hit those bids going into the weekend. But perhaps, as our old friend used to say, sell or not sell, perhaps this is a weekend where you may want to think about not selling going into the weekend. Just at least so you can sleep at night and we see how things start unfolding for next week. But speaking of next week, we got to start getting to it. So that's all the time we have for the Crystal Ball segments, also all the time we have for this episode of Vol Views. But before we go, as always, let's check back in one more time with the Greasy Meatball. Hopefully he's finished his tasty and delicious salad, and we can see what he has cooking over there in the land of the pit that may interest you. Mr. Greasy Meatball, what is up in the land of the pit?
We've got a boot camp coming up a week in a couple of weeks. You can go to optionpit.com/bootcamp to register. It's going to be a 4-day, 9-hour session, 9 hours of education. So it's a pretty intense.
4 days, 9 hours. There you go, listeners. So if you want Mark wearing a drill instructor hat and a whistle and blowing it and yelling at you, and that sounds like a good time, then surf on over to optionpit.com for the old boot camp. By the way, Mark, our lawyers will be in touch regarding your theft of our options boot camp title. But that's a discussion for another day and to be played out in court. And on behalf of the Greasy Meatball and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions on such a wide array of topics. We love to hear from you guys. Keep them coming. And we'll see you next time right here on Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.